Hey everyone, welcome to another amazing Octa FX live trading session with me. My name is Ebuka Ambrose, and if you can hear me and if you can see me, go ahead and type in the comment section your name and where you're watching me from right now. You can also go ahead to tell me if this is your first time, taking part in an Octa FX live trading session. So go ahead and type in the comment section or the live chat your name and where you're watching me from. And if this is your first time, in live trading sessions, we analyze pairs and and we take trades. So in the course of this live trading session, if you have questions or your if you have your pairs that you want me to analyze, go ahead and also type that in the comment section, and I would look at your questions. I would answer your questions. I would also look to analyze your pairs during the course of this live trading session. Okay, let me look at the comments. God's gift from Benin. He says it's his first time. Welcome, God's gift. Okay, before we go on, and while I wait for you guys to drop your names and where you're watching me from, let's talk about disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this live trading session or linked to this presentation are provided as general market commentary and do not constitute investment advice. Trading is risky. So I'm just going to go over a few things that you need to include in your framework. We've talked about framework, and framework is, are like things that would help you understand what is going on in the market, help you identify levels to buy and levels to sell. Just basically give you an understanding on or an understanding of what's happening in the market at a certain time. Okay, so the first thing that should be included in your framework is market structure and things to identify market structure with. So market structure helps you understand and define the current market condition, right? So with market structure, you can understand what's going on in the market. Is this an uptrend? Is the market a downtrend? Is it ranging between highs and lows? Is it consolidating? The market structure is going to give you buying and selling opportunities. Timmy Bragg from Nigeria, Ramesh from Malaysia, massive welcome to you guys. So you can identify market structure with a candlestick chart, which is the popularly used type of trading chart, candlestick. You can also identify market structure with chart patterns, trends, ranges, supply, and demand. Okay, so these are the things that you can use to understand what is going on in the market. You can use this to define the current key levels, right? So when you come into the market, you want to identify key levels. These are levels that market touched before, market tested before. These are levels that market would most likely retest again. These are levels that market would most likely come back to touch again. And you can identify your key levels by using trend lines. You can identify levels by using the moving average as an indicator. You can also identify your key levels by using support and resistance. So if you don't know what support and resistance is, support is basically an area on your chart where buying pressure could step in. Resistance is an area on your chart where selling pressure could step in. Another thing that should be included in your framework are entries, right? So for you to place a trade, you have to enter the trade, you have to open a trade, right? And to identify entry points, you can use candlestick patterns, which shows you the momentum of that candlestick, right? So if you see like a candlestick with a thick body and a small wick, you can use it to identify the pressure or the momentum of that candlestick. Is this a bullish candlestick? Is this a bearish candlestick, right? So if you see candlesticks that have longer wicks, this indicates rejections. It could be a bullish rejection, it could be bearish rejection, but you can use a candlestick pattern. You can also wait for the candlesticks to close. The candlestick pattern just basically tells you or helps you to refine your entries. And you can also use the moving average. You can enter at a breakout of the moving average, and this can be included in your framework. Now you've identified what you can use to open a trade. You can also, for you to achieve your financial result of that trade, you can use your swing highs and swing lows to determine your exit point, and you can use your stop loss order and take profit order to close your trades, right? So these are things that should be included in your framework, just to help you give you a better understanding on how to analyze the market, how to refine your entries and your exit points, just to give you a better understanding of what to do when you come into the market. The last thing that should be included in your framework is risk management, right? So with risk management, you're able to manage your risk, you're able to mitigate the effect of negative trades on your trading account. And one way to do that is using a risk to reward ratio, right? So a risk to reward ratio basically tells you how much you want to risk and how much you want to make on a single trade. And with the stop loss, you just use it to cut off negative trades, when the market is going against your initial order. Okay, so these are things that should be included in your framework. This would help you understand the market, give you better buying and selling opportunities in the market. Now, the purpose of a live trading session is to analyze trades and look for opportunities to place trades, which is what we're going to be doing right now. I'm going to analyze some pairs, and I'm already seeing some pairs in the comment section that you guys want me to analyze. You can go ahead and drop more pairs that you want me to analyze today. It's been a week with series of economic events, and that's part of the reason why that's part of the reason why the market gets volatile, right? And that's an important thing to look out for with trading. Aside just coming to the charts to analyze technically, you can also take advantage of the economic events and the fundamental analysis aspect of trading, right? If you want to take advantage of the fundamental analysis, or you want to get reports on economic events, you can make use of the Octa FX economic calendar to get reports on. I think I'm going to quickly show you guys how to get that. So you go to the Octa FX website, and octafx.com, and then you go to analysis and education. So you want to click on economic calendar, right? So this is an economic calendar that shows you the events for today, yesterday, tomorrow, the previous week, next week, previous month, this month, just for you to keep an eye on what's happening economically in the market in some countries. And it's important to pay attention to this because you're trading currencies, right? You're trading currencies, so it's very important that you pay attention to what the central bank of these countries are saying, because that's also going to have an impact on that currency. All right, so we're going to look at euro dollar right now, and we've had reports on the euro. We've had reports on German year-over-year and month-over-month retail sales. We've also had speech from the ECB president, Lagarde, and we're going to look at euro USD technically right now. So the first thing you want to do is to identify key levels, right? And the first key level we are seeing, let's start from the bottom, is the breakout above the most recent, which is the breakout above this resistance. Now, why is this a resistance? Price found it difficult to break. Price found it difficult to break above these points in recent times, but price finally broke above it. And that's one thing with support and resistance. If support is broken, go down to potential resistance. If resistance is broken, markets could get back to make a retest at that zone, and that turns to support. Right now, currently gold is sitting at this previous support. I mean, it was broken through, yes, But now if you want to go, I mean, we already have a short position on euro dollar right now, and that was because the euro dollar broke below this trend line, and that's that's why you should take advantage and pay attention to key levels with your trading. 1 second. Yeah, so that's why you should take advantage and pay attention to key levels, using your trend lines, support and resistance, because um there could be breakouts of these supports levels, there could be breakout of these resistance levels, there could be breakout of the trend lines. And if you notice, the euro dollar broke out of this trend line. I think I'm going to zoom in a little bit. Broke out of that trend line, and you're already seeing this indecision candlestick. Let me zoom in a little bit. So there was a pullback, but the euro dollar market could not sustain this bullish momentum, and what happened? The market started to come down, right? And that's what you want to look out for in breakouts. When there's a breakout, you always want to look for continuation momentum, right? Continuous momentum. So if it's a breakout to the upside, you want, just like we have here. I mean, there was a breakout. Let me take this off. There was a breakout to the upside, but there was no sustained bullish momentum, right? And after you break out, you want to pay attention to the market to see if there would be sustained momentum. It could be to the upside, it could be to the downside, but you always want to pay attention to that market. And as you can see here, there was no follow up, no strong or sustained bullish momentum. And what happened? The market started to come down. And if you're a breakout trader, it's important that you look out for continuous momentum, so you don't get caught up in fake outs where the market just breaks and returns back into the trend or into the zone, or the market breaks and starts to pull back in the opposite direction, just like it happened right now. So for the euro dollar market, what you want to see is a sustained bearish momentum below this support. I mean, if you observe closely, let me take this off so you guys can see properly. If you observe closely, you're going to see that the market broke below this support on the 4-hour time frame, straight down. Now what you want to see is a sustained bearish pressure below this support, and then we can look for selling opportunities and take targets at this previous swing low. And if the market continues to break below all these points and push further downwards, then you can adjust your targets and use trailing stops, right? But like I said, you want to wait for confirmation when you see continuous bearish momentum, so that the market doesn't just go straight back into this zone and then you get caught up in the middle of that fake out right there. Okay, so that's what you want to look out for on euro dollar. A continuous bearish momentum, probably let me take this back. Yeah, a break below the 1.0627 zone. So a break below 1.0627 zone can indicate that the euro dollar market is going to push further downwards to this zone, right? Yeah, so that's what we want to look out for: sustained bearish momentum below this support. If that doesn't happen, if the market pulls back and pushes further upwards, then I would be looking for buying opportunities at a breakout of this 1.0765 zone. Yeah, so that's two ways that the euro dollar can go. It can also consolidate within this zone, just like this. Yep. Yeah, so that's what you want to look out for on euro dollar. A sustained bearish pressure below this 1.0658, below that zone, a sustained bearish pressure, and then you can ride euro dollar to the downside So that's what you want to look out for. Let me look at the comment section and see if you guys have currency pairs that you want me to analyze. We're also going to look at the pound dollar. Right, let's check something. Let's go to the lower time frames. Yeah, so this is euro dollar, by the way. Let me just show you guys something else. So the newly formed candlestick on the 1 hour time frame is bullish at the moment. I don't know if it's going to close bullish, I don't know if it's going to close bearish, but at the moment it's bullish, right? So we want to wait for sustain. We want to see some bearish momentum that breaks below the 1.065 zone before we can, trade the euro dollar to the downside, right? That's what we want to look out for. Okay, let's look at the pound dollar. So you want to go to the higher time frames when you are analyzing the market. You want to first go to the higher time frames because it gives you a clear picture of what's happening, right? It's just like let me give you guys an example of a 1 minute and a 15-minute candlestick and a time frame. So you can have 15 1-minute candlestick on a 1 minute time frame, and that is just going to be one 15-minute candlestick on a 15-minute time frame, right? So you want to go to the higher time frame so you can get a clear picture and overall direction of where the market is going before you go down to the lower time frames to analyze, take your trades, and identify your levels, right? Your levels of your entry levels, your exit levels. So we're looking at the pound dollar right now, and at the time we analyze this market, this is called a wedge pattern, a rising wedge. And what happens with a rising wedge can be a continuation chart pattern. A rising wedge can also be a reversal chart pattern. So a rising wedge is formed when the price consolidates between upward sloping support and resistance line, right? So when the price consolidates between support and resistance that slopes upwards, you can call that a rising wedge pattern. Just going to type. I'm going to keep it here. So you can see that here the slope of the support line is steeper than that of the resistance line, and this indicates that the higher lows are being formed faster than the higher highs. Now when price consolidates, what you want to look out for is a splash, a breakout, right? When price consolidates, when price moves narrowly to a direction, for example, the price have been moving narrowly to the upside, and what you want to look out for, obviously, by putting your trend lines at the resistance, connecting your trend lines at the highs and the lows of that wedge, of that consolidation. The wedge is you have consolidations like the rectangle patterns and the pennants. So you want to connect your trend lines and expect a breakout either to the upside or the downside. Now in the GBP USD market, in this case, the breakout was to the downside, right? And currently the pound dollar market is at a key level. I'm going to explain why this is a key level for the pound dollar market by using this tool. Okay, so if you look closely, you're going to see that this was a level that the pound dollar market found it difficult in previous times to break through below. Made a retest at that level was difficult, couldn't sustain a break through that level, and price finally broke below that level came back to make a retest. Remember what I said about, a breakthrough support makes it resistance, new resistance, a breakthrough resistance makes it that resistance level to turn to new support, right? So this became a resistance for the pound dollar market on the 17th of May. Found it difficult to break above, came back to make a retest, couldn't sustain a break above, but it finally broke above these levels. Made a retest, couldn't break below, made another retest, couldn't break below, and the pound dollar market is currently sitting at that key level. Now, what do you want to do, right? You want to observe, you want to see if there's going to be a pullback or there's going to be sustained bearish pressure, right? We're already seeing this huge, big bearish candlestick that indicates strong bearish momentum. But that is not enough because this is a key level, right? So we want to see a break below this key level that would indicate continuous bearish momentum, and then we can expect the pound dollar market to come back to this zone. And this zone in the coming weeks. Okay, so now is not really, this doesn't seem like a good time to get into a trade on pound dollar because I'm not seeing continuous bearish momentum on this market right now, and I'm not seeing strong bullish momentum to say it's going to pull back up and go back into the 1.263 zones. So I'm just going to look out for the pound dollar market. I'm going to put my eye on that, and you should too. Just observe and see if there's going to be a break below or the market is going to pull back into these levels. Okay, whichever one the pound dollar market decides to do, you can take your trade in that direction. So I'm just going to identify a level that you should be looking to go short on. I'm just going to identify a level that you should be looking to go short on pound dollar. Just going to change this to red. Yeah, so if it breaks below that level, then I'll be more comfortable to go short on the pound dollar market. Okay. Another currency pair in the comment section that I can see right now is the Aussie dollar market, AUD USD. Okay, just gonna zoom out. So if you have other currency pairs that you want me to analyze, go ahead and type the currency pairs in the chat, and I would look at those currency pairs. Okay, so like I said, for your framework, it should include your key levels. So if you come into the market, you want to identify key levels. These are levels that market either found it difficult to break above or below, or where market just made multiple retests at. And I've already identified these key levels, this point, and this point. And for Aussie dollar, I'm just going to go to the daily time frame. Okay, so if I zoom in, you're going to see a rejection by the sellers, right? So the Aussie dollar market broke above this key level. Why is this a key level? If I take this back, I can equally take it back to, I can take it way back. These are levels that market made multiple retests, all these key levels, this level as well, and this is a level that the Australian dollar market broke out of, but there is no sustained bullish pressure, right? As a matter of fact, from what I can see, it's been rejected by the bears, and the market is coming downwards. The market has already come down below this resistance. So what you want to look out for on AUD USD would be sustained bearish pressure below this resistance. If you notice, the market has been consolidating at this point. I mean, broke out but couldn't sustain any pressure. So you want to see if the bears can equally sustain this. The dollar is going to gain more strength over the Australian dollar and push the market way down to this point, and then you can be looking to short Aussie dollar on a short term down to this point. Let me calculate how many pips that's going to be. So that's going to be about 50 pips. And yeah, so this is why your key levels are important. This is why you should take advantage or use your trend lines to identify key levels. This line has served as a trend line support. And why is that? It's because the market has been making multiple retests at this trend line and could not break below it for a good number of times that it has made that retest, right? And that's where the market is currently. So your confirmation to go short should be a break below, or could be a break below that trend line, and a close below that trend line, sustained bearish momentum below this trend line, and then you can go short on the Aussie dollar. And it's going to give you like a 1 to 1.5. Yeah, but yeah, about 60 pips to the downside. And if the market continues to break below these levels, then you can adjust your targets and adjust your stop loss to secure profits. Use a trailing stop and secure some profits. If it doesn't do that, if it doesn't break below this trend line, if you don't see the bearish momentum below this trend line, and the market pushes to the upside, then you want to keep an eye on a break above 0.7250 to continue to the upside, right? A break above, possible retest, something like this. Yeah, so that is for Aussie dollar. Somebody's saying XAU USD. Let's look at gold. Okay, let's look at I'm going to look at gold, but let's look at pound yen before I look at gold. All right, so I'm going to go to the high time frames, identify key levels, and I mean we're already spotting strong bullish momentum on the pound yen market, although we're seeing rejections. And let me just identify this zone real quick. we're seeing the pound yen market respect this zone which it failed to break above in previous times, and now the market has been pulled back below that resistance, right? So I'm going to go to the lower time frame. We still have that triangle pattern on the daily time frame as well. You still have this rejection on the daily time frame as well. Just going to look at the 4-hour. Yeah, and we still have that rejection on the 4-hour time frame on the pound yen market. Also going to identify this level. So if you want to take a buy or a sell, now doesn't seem like a good time to trade the pound yen market, because we don't have a break above this zone, and we can see price push back into or push back below that zone. So you can wait for a retest here and look for opportunities to take your buy. But if market breaks below this, then I think I'm going to cancel my idea of going long on the pound yen, right? But right now, there is no indication, there's no confirmation to either buy or sell, because it's just caught up between 1.63, caught up between 1.63 and 1.62, right? So just so that you don't get caught up in between the consolidations at this point, you can wait for pound yen to get into any of these zones, consolidate. If it breaks below, then you're looking for opportunities to go short, but this can be a good area to look for buys and take it to the upside. If it breaks below, then you're looking to go short. This is also another significant area for you to look out for, because I mean, if you go back to April, you're going to see that the pound yen market couldn't break above this point, couldn't sustain, at this point it couldn't sustain a break above. At this point it couldn't break above, couldn't sustain another break above this zone. So these are like levels that you want to look out for, that will determine your next line of action on the pound yen market. So if you can wait for the market to fall back into any of these zones for you to take it to the upside. If it breaks below, then we're going to look for selling opportunities on the pound yen market. Okay, let me look at gold. But like I said, on GBP/JPY, it's picking up. Or is showing strong bullish momentum on the daily time frames, just like we saw here. Take this out. After this break above the triangle pattern, after this break above this resistance trend line, you can see that it has been sustaining that bullish momentum. There's a rejection at this point, at this zone, due to this. But if you're looking to go long, then you should wait for a break above that level to get more comfortable or more confirmation to buy the pound yen. Okay, let me look at gold. I'm going to clear this off. Yep, so I already have the levels on gold marked out. If this trend line goes way back to, let's see, to April 2020, right? And these are this trend line serves as a support trend line for has served as a support trend line for gold, because for every time it made a retest since April, since March 2020, it couldn't break below it, right? Currently gold has broken below, pulled back in, and it has broken below again, but we're seeing that it's picking up strong bullish momentum. It's picking up, it's pulling back in, right? So an idea to short gold would be if gold sustains a bearish momentum below that trend line, because it's a significant one, right? I mean, you're taking it back to 2 years ago. This has served as a strong support trend line for gold in the last 2 years. So if gold sustains a bearish momentum, a bearish break below that trend line, then we can look for selling opportunities. But currently it's pushing back in, which is what it did right here. Broke out and pushed back in. So we can equally look to go short on gold if we see rejections at this point, right? Because these are points where, let me take this back. These are significant levels on gold that we've just traced back in time. So if you want to go short, then you can wait for gold to get back into the zone and look out for bearish pressure kicking, the pullbacks at this point, and you can short gold down. If it breaks above, then we want to look for bullish momentum to take gold to the upside, right? I'm quickly going to see if this rhymes with the 68. It's the 61.8, yeah. So yeah, these are levels that you want to these are levels that you should expect bearish momentum to kick in on gold to take your short position on gold. If it breaks above it, then we're expecting gold to push upwards. Okay, we can also connect a trend line at this point. You can also connect a trend line at this point because on the 4-hour time frame, this trend line has served as a strong support trend line for gold. If you noticed, it could not sustain any bearish pressure for every time it tested this trend line. Let me take this off so you can see clearly. So it could not sustain bearish pressure for every time it's made a retest at this trend line. And yeah, this can serve as your first target if you want to take a sell on gold here. If you yeah, let me indicate. So yeah, the trend line can serve as your first target if you want to take a sell on gold at 1856. The reason why I'm saying you should look for selling opportunities is because this is a key level, right? This is also a key level. The 1870, the 1865 zone is also a key level that gold can be rejected from. So those are levels that you want to look out for if you're selling gold. If you want to buy gold, then you should wait for a break above 186. That's about 200 pips from 1867. That's about 200 pips from the current market price. Yeah, so this is why you should wait for confirmations. You don't want to get into trades and then you don't want to get into trades that you're not sure of, right? You want to wait for confirmations. You want to wait to see what market does. You want to wait to react to see markets react to your levels. You want to wait to see market react to your zones, and then you trade the market. You let the market make the money for you. Okay. So this was a very amazing live trading session. I'm looking at the comment section to see if I can get questions. I'm not really seeing any questions. Yeah, not really seeing any questions. So this was a very amazing live trading session. Always remember to analyze the market before you place trades. Remember that you need to have a framework which would basically help you identify areas on your chart where buying pressure could step in, selling pressure could step in, and always use proper risk management on your trades, so that you can mitigate the effect of negative trades and you can still have more room and more money to open more trades. Okay, thank you for coming, and I'll see you guys again.